Good morning, everybody. Welcome to the Trading Market Technicals Morning Call video for Thursday, June 21st. And pretty much of a lackluster day until around 12:30. And then, of course, the statement at 2:15 yesterday. We had some decent movement, but a lot of choppiness and to be expected. Ben Bernanke really provided a little bit of good news, stating that they will be extending Operation Twist. But no major surprises, and really had limited impact on equity markets. We actually were spiked up 8 points, S&P points in a couple of minutes, then rallied back up 15 S&P points. Took about a half hour, and then we started drifting lower, tested the low of day, and then bounced into the close. You can see this here in the 5-minute chart from yesterday. This is the E-mini S&P. Lackluster day right up in this area. But however, the traders and investors that were front running Ben Bernanke, now what do? Do they take profits, or do we continue to buy this market up? I do think the market is overextended, like I've been saying. We do have our momentum indicators overbought, and our internals showing overbought readings, which I'll get into again. And I always look at that at the end of the day and see where we are and where the market internals are really pointing to and was showing us. I do favor the upside in the intermediate term, but not before a pullback. We've been up for 6-7 days, and which I'll get into the charts again and show you. But pretty much a lackluster day yesterday. A lot of chop overnight. China had their PMI, which was less than expected, and as you can see here, we basically kind of drifted lower, just a touch, and then we're kind of chopping around here. Futures are down 3. And pretty much quiet. Again, the FX markets have been very, very quiet for the last couple of weeks, actually. But that indicates a larger move to come. I do see gold and silver making some sort of a big, big parabolic move. Which way, not sure yet, but I do think it would be to the upside until Europe really gets their act together. Other than that, I would suspect some sideways trading. I think the market will pull back a little bit here, and then really we need to examine the pullback. If it's going to be on higher volume, then it's something bigger than just a little bit of a pullback, or is it just a low volume pullback which could be bought into and looking probably to test the highs here. Okay, but right now kind of quiet. We are in the summer months, so I want to get into the market internals here. And as you can see, our trusty McClellan oscillator is reading overbought in this area. And we did have a little bit of a hook down here, but we really need to get back down in this area here, 10-ish, to really work off this overbought reading. But as you can see here, we still have our S&P, which we have our line chart and inverted head and shoulders, which basically worked out. I think actually went to target or close to it anyway. But as you can see, we're overbought, so we really need to use caution here on the long side. Playing the longs, and for the shorts for that matter, just until this market can readjust itself and realign itself. Next indicator we have is the NASI, the NASDAQ Summation Index, and as you can see here, everything pointing up higher. Here's the candlestick chart here, and this is the NASDAQ Summation Index. And as you can see here, we're starting to really point higher, but that doesn't mean that we cannot go higher here. But just again, like to use caution to see where we are. Another one here, bullish percent index on the daily chart. Again here, S&P, and now we're starting to get into this overbought reading in the RSI here in a 14. Again, still a little bit more room to run. Now, usually on Fed days, the initial reaction would probably be we had that positive tone, then we rallied into the close again from testing low a day. Usually is an inverse reaction, so we usually get some sort of a sell-off going into the next day, which would be today. So that's something that we need to, again, it's nothing to trade off, but it's just to be aware of, and especially that we're overbought here, so on the nearer term. And next chart here is our trusty bar chart momentum index. Now, as I mentioned yesterday, we were up at these lofty levels of 101.5, almost touched the 102. We have gone back down to that 99 area here. To really, really work off these overbought readings. I'd like to see it get down to 98.5, even down here in this area here, 97, 98. Last one here is our number of stocks above the 20-day moving average, and as you can see here, we're at these lofty levels. and this also needs to be worked off here. And if you even looked at the 50-day moving average, stocks above the 50-day moving average, again, um, quite extended, and we need to really work these things off before I really get excited about looking to buy stocks here. Now, there are some stocks that have been battened down, and I'm really looking for. A lot of these stocks are some of the rare earths that I like. Molycorp, the Rees, some coal sector, which has been just destroyed, out of favor. These are some of the stocks that you have low risk entry. ACI, PCX, couple other sectors I like, steel. But again, these are stocks that have been beaten down, and you really need for confirmation before you jump in looking to get long any of these stocks. Okay, at least the sectors need to realign, base a little bit before looking to move higher. But those are some of the stocks I've been looking at on my watch list that haven't moved, that are now starting to move. Okay, and here's a 5-minute chart of the SPY. And reason why I bring this up is I like to see, and it kind of gives you the activity of the day. See, and as you can see here, we are really just did nothing here. We are just literally in a channel all day until 12:30. We had the initial dip. That's why a lot of traders do not like to trade the Fed. It's really not worth it. And take a couple of longs or shorts, and everybody gets stopped out in the interim here. So here's a 5-minute. As you can see, we rallied back up. We tested the low of the day, and then we rallied into the close. And again, futures are down about three handles, but not really much of a big move. Now the Qs had a big day, big few days actually. As you can see here, we've been up quite extended. We did have some selling come in yesterday in the Qs. As you can see here, we have this volume bar, red volume bar, overextended in our stochastics. MACDs are not quite overextended here with some really additional move to run up. But I think this market is ready for a pause, at least a little bit of a pullback back into these support areas, which were resistance, testing these key areas, holding and making some sort of a higher high, nice little pivot area here where that can be bought. And that's something that we're going to be looking for in the coming days and weeks to see if this market can be bought here. Spider's daily chart, same thing here. As you can see, guys, just really typical. I like when everything lines up together. We have a little bit of a spinning top here. Same thing. We had a nice big run up. Now we're at the 50-day moving average here. And if we can get the market to come back, maybe pull back 20, 25 S&P points, just kind of stay above the 20-day moving average. Spidey's coming in maybe to 132.5, 133 area, and pivoting in this area here, making a lower high, and then breaking back above. Then I think you have a run to test the highs here at the 142 on the Spiders. Take a look at the transportation, big leader in these sectors. As you can see here, we had some nice volume, which we pointed out. Again, all of these momentum indicators are pointing overboard here, so we really want to be careful. This is an area here I'd love to buy this around 92-ish, holding above the 50-day moving average, right above this pennant area, and look to really try to test the highs here somewhere in this, let's say 95, 96 area. But again, you can see our Bollinger Bands here. We're kind of overextended on a daily chart, so really due for a pullback, and a healthy pullback for that matter. If we can get a healthy pullback, then I think this market can be bought into. But we still have a lot of uncertainty here, guys, in Europe. And Europe has not been fixed by far. So we want to really keep our palates dry, reduce our risk here, try to take the best setups. And it's been hard, believe it or not. A lot of stocks either has not moved or are moving, but moving ever so slightly. And then you have days that the indexes are moving and stocks really are not moving as much. So there's a lot of research, a lot of looking and finding, scanning during the course of the day to try to find some good setups as far as day trading is concerned. But again, a lot of sector rotation, which is good. It's a good thing when money's moving out of one and rotating into another, where stocks and indices are really not getting hammered. And you'd be surprised the way things are overseas. China slowing down, why this market hasn't gone any lower. And of course, that's also with the compliments of the Fed. Diamonds for the Dow Jones. We have our little same. If you notice every chart I put out, they're all the same. Nice big, we have a volume spike bar in red. We're overboard here, so we're due for a pullback and a healthy pullback. Swing traders, tighten up the stops. Day traders, look for something that's healthy, that's trending for the day, and stick to that trend in that particular stock. Russell, last one on the Russell. Same thing here, but we had a nice big run up. 1, 2, 3, 4, 5 big large days. Volume here, red bar, and again, stochastics, MACD showing overbought readings, and that's something that we really want to make sure that that we're aware of. That look, a pullback here is imminent. I think it's healthy, long as the market doesn't pull back on heavy volume and start breaking some key support areas. And of course, we'll be monitoring that as well. Just a real brief as far as advanced decline was basically flat. So issues were really didn't go anywhere. You can see that clear as day on the charts. A couple things to note as far as the econ data today. We have Philadelphia Fed manufacturing survey coming out at 10. We have also existing home sales at 10. We also have May leading indicators at 10 o'clock, and we have the 8:30 initial jobless claims. That's going to be watching very closely. As you know, jobs are starting to deteriorate again, and that could also be a market mover. So really keep in mind. Take a look. I would be really hands off here until at least after 10 o'clock to see what type of direction the market's going to give us for today. All right, guys, have a great day today. Again, be safe. Use stops. Cash is a position. If you're uncertain about where the market is, no sense really sticking to the market here until you really get an idea of which way or what direction, at least you feel comfortable as a trader. But until then, remember, stops are your best friends. Very important here. Can't stress that enough. All right, have a great day, and we'll talk to you tomorrow. Take care.